Every remote seller, including giants like Amazon and Walmart, is very familiar with South Dakota v. Wayfair, the landmark 2018 U.S. Supreme Court decision, in which the High Court held that physical presence in a state is not necessary to require remote sellers to register, collect, and remit use tax. The decision was a sea change in the state's ability to reach a taxpayer without physical presence in the state. Once Wayfair was decided, states raced to enact economic nexus laws that require remote sellers to register and collect use tax once they meet a certain threshold. After Wayfair, many states enacted an economic nexus threshold that mirrored South Dakota's. More than 100,000 in sales into the state, or 200 or more separate in-state transactions. Two ways that nexus can be established. Since 2018, all states with a state sales or use tax enacted a form of economic nexus, but with differing thresholds. For the last few years, though, the trend has been the repeal of the transaction portion of the threshold. As of July 1st, 2024, 26 states do not impose a transaction threshold. Some sellers sell goods at low sales prices and meet the transaction threshold quickly. In addition, sales and use tax compliance is notoriously complex. There is no threshold uniformity among the states. This complexity has prompted the USGAO to recommend that Congress consider establishing guidelines to create nationwide parameters for the state taxation of remote sales. 13 states never enacted a transaction threshold. North Carolina is the most recent state to repeal the transaction threshold. Effective July 1st, 2024, economic nexus is met if a retailer or marketplace facilitator makes more than $100,000 in North Carolina sales for the previous or current calendar year. Retroactively effective January 1st, 2024, Indiana's economic nexus threshold was amended to eliminate the 200 or more separate transactions prong of the threshold. As of that date, a remote seller meets the threshold if the seller's revenue from Indiana sales exceeds $100,000. As of July 1st, 2024, 19 states plus the District of Columbia still have a transaction threshold. Other states to consider as a comparison are California, the world's fifth largest economy. California has no transaction threshold. Economic nexus is met by any retailer who has California sales that exceed $500,000. New York has a transaction threshold. A business with no physical presence in the state, but one that makes more than $500,000 in New York sales and more than 100 sales delivered into the state has economic nexus. Texas has no transaction threshold. Out-of-state retailers who exceed the safe harbor amount of $500,000 in Texas sales have economic nexus. Pennsylvania has no transaction threshold. Persons who make more than $100,000 in Pennsylvania sales have economic nexus. Tax law constantly evolves. When Wayfair was decided, it overruled long-standing U.S. Supreme Court precedent that physical presence was required to establish sales and use tax nexus. A remote seller taxpayer who must comply with varying economic nexus thresholds must remain vigilant and aware. The elimination of the transaction threshold may make compliance just a little simpler.